Should you sell your probate real estate off market or list it with a real estate agent? Guys, as somebody who owns an investment company, a real estate team, I get this question all the time when helping probate real estate situations. And so today I'm gonna break down in this video what the pros and cons of each avenue are and when is it the best case scenario to go with listing with an agent or selling off market. And I wanna tell you, stay all the way to the end where I'm gonna give you an alternative solution where it can create long-term cash flow, get way more for the property, and ultimately not be a landlord. Now, as always, hit the notification bell, hit subscribe, please comment below with any questions, and I'm extending the opportunity always to schedule an appointment with me, no matter where you are in the country, to help you get connected with people who can help with probate. Now let's dig into it. Guys, when it comes to selling off market to an investor, who is the investor? Typically, these are people who are gonna be sending you direct mail, text messaging, calling you once your affidavit has been filed with the court and the letters of testamentary have hit your mailbox. Why? It's public record. These investors are looking for off-market opportunities, typically with deferred maintenance properties where they can do three things. One, fix and flip the property, meaning buy it, rehab it, and relist it for a profit. Next, buy and hold investors, people who want to buy low, sell high, but earn cash flow in the time that they hold the investment. So this is gonna be typically an investor that's gonna take this property, maybe do a little updating, get renters into it, and then hold it in his portfolio for the ultimate goal of cash flow and appreciation. The third type of investor may be assigning that contract, which we call wholesaling. And what you need to be understanding about that process is they're actually not the buyer. They're taking the contract that they've negotiated with you and or assigning it to another investor, which is probably fix and flipping or holding that property. Now, there are some alternative solutions that investors may be doing, including short-term rentals, Airbnb, and those types of models. Also, there might be somebody that's buying it off market to owner-occupy it. But primarily, the people that you're gonna be selling it to are going to be hitting you with this marketing. Fast close, no realtor commissions, we'll pay your closing costs, no appraisals, no inspections. So for a house that needs tons and tons and tons of work in a lower demand market where people are willing to do that when it's listed, it may make sense to take a lower offer than the value of the property just to get rid of it and make sure that you can wipe your hands clean and not have to worry about repair addendums, having a long close, or dealing with FHA or VA appraisal conditions that may come up with the condition of the property. Now, I want to stress this. You need to talk to your attorney as well as make sure that your probate is not court supervised and they're going to do an open bid process, because if you try to get a first offer from an investor and it's a lowball offer and the court says no, there's a value problem, then you're going to be in a situation where you're going to be wasting a lot of time and that investor is going to get mad and move on. But I just wanted to let you know that that's typically the buyer on the off-market investment, right? And I want to say that sometimes, in my own experience of owning investment companies, that's exactly what the probate estate situation needs. They need somebody to come in, make an offer, and make it quick and painless. And so in that situation, if your probate real estate needs tons of work, if your probate real estate is in a less desirable location, if the real estate market or the area that it's in has lower demand, or it has a weird layout, or the property ultimately is not desirable, it may make sense to sell it to an investor. Now, if this property is on the beach in Newport Beach, you probably don't want to sell it to an investor off market, regardless of its condition. Why? The location will sell it regardless of condition. Now, ultimately, things you need to understand about the cons of selling with an investor: lower price, could have a sketchy buyer that is wasting time. You could have a situation where the buyer doesn't have funds, right? They're trying to assign the contract, but they really don't have the funds to buy it. So you may waste time in that process when it could be valuable time on the market with a real estate agent. Also, with investors, you need to make sure that the contracts or the favorable terms are looked at through your attorney's eyes. Make sure that they're not writing a contract that makes you paying all the closing costs or you doing something that you're not comfortable with. And ultimately, also the last con of selling directly to an investor is that you're not going to maximize the most money if the situation makes sense to list it. Meaning, The convenience is awesome, but the $100,000 that you left on the table is not. And sometimes that is not in the best interest of all the heirs and beneficiaries to this probate process. Now, pros and cons with listing with an agent, okay? The pros is that you're gonna get honest fiduciary representation, we hope, which means you're gonna get a real estate agent that's gonna tell you the value, gonna run the comps, and try to get the most squeeze out of that orange. And what I mean by that is that they get paid more, the more they can sell it for. And that means more money in your pocket. But you got to do a net to seller comparison of where if this property is selling $275 without realtor commissions, closing costs, and this property is selling for $325 on the market, really what is that net gain between both scenarios? Also a pro with selling with a real estate agent is that they have a network of buyers and people in their brokerage that may be interested to make an offer very quick. Timeline could be not as quick as an investment deal, but the timeline to go into contract could be relatively quick, depending on how experienced your agent is and how well connected they are. Also, when you're looking at real estate in the best eyes of the estate, listing it and trying it on the market first is what I try to always tell people is probably the best situation, unless it's deferred maintenance or a property that needs a lot of work, because you're gonna have a chance to send it to the marketplace and see if you get any offers, right? You can always go back and try to sell it off market if it doesn't sell over here. It gives you the best opportunity to get the most money, but there are some cons to it. You're gonna have inspections. You're gonna typically have appraisals. So your purchase price or your sale price needs to be in alignment with the market. You need to make sure that if you're gonna offer FHA and VA loan terms, there's not a bunch of issues that are gonna come up that you're gonna have to come out of pocket as the personal representative or the estate to correct those issues. Typically, also timing. You're gonna typically have a 30-day close versus like a 10 or 15-day close with investors. But sometimes that's okay, right? You're okay with waiting to get the most money. Also, you may have a real estate agent that knows a lot about probate, lots of experience doing these types of transactions, where you have a novice or a not so familiar investor over here who's just marketing to probates. And sometimes the best experience to the whole ultimate situation is to hire an expert who knows how to help you with estate sales, how to help you with cleaning up the property, how to help you to get the most money possible. Now, in both scenarios, sometimes it makes sense to ultimately ask and interview both investors and real estate agents on value, on what they think is the timeline it'll take to sell, what options you have in terms of selling it off market versus selling it to an investor the agent works with off market, right? But interview both options. Make sure that you've turned over every stone in this process so that you're not leaving money on the table. Remember, your best interest for the estate is the most money possible. You do not want to take convenience and leave tons of money on the table. And that's what I try to tell all of my real estate probate clients from the residential real estate side, is that we can always attempt to sell it off market for a lower price if this does not work. Now, I told you to stay all the way to the end because I'm going to share an alternative option, okay? Now, if that property is free and clear, and the estate does not need to liquidate that property, meaning there's heirs and beneficiaries that are okay with having that property become a rental, or they're okay with that property being sold with owner financing terms. Guys, I picked up a lot of investment deals over my career by a probate situation that did not need to liquidate the property. There may have been multiple properties in the estate that the beneficiaries or heirs or single heir was okay selling it to me on a installment sale or a note and trust deed sale. And what I want to do is briefly discuss what that means. This means that you're going to come up with a price, an interest rate, and a term, whether it's a 5-year balloon, a 10-year balloon, a 15-year balloon, a 30-year balloon, and the amortization of how that payment's going to work each month. Is it a 5-year balloon on a 30-year amortization, meaning that payment is the same as somebody using a 30-year loan, but they're going to owe you the balance accelerated at 5 years where that balloon payment comes up, meaning the end of your owner financing contract. What that allows you to do is take that property, sell it for a good price, wipe your hands clean, but now play the bank and the seller. So not only did you get the price that you most likely wanted, but you're also making money on that asset. Now, I don't know when the last time you've looked at a loan estimate, But when you sell a $250,000, $275,000 house, and then you look over 30 years how much interest you pay, it's typically way more than what the purchase price was. So you have interest here and the actual purchase price here. And so typically this is perfect for somebody who has a more wealthy estate or somebody who doesn't need the money, right? Their need from the liquidation of that estate and those assets and the approval from the attorney is that, yes, you can sell that property with owner financing. Now, two structures of those deals. An installment sale really means that you're going to hold the deed until they pay you off and then you're going to release it to them. That is in the best interest of the seller, not in the best interest of the buyer. Next is a note and trust deed. Think of this like a standard mortgage. There's a promissory note and a deed of trust. The promissory note is going to line out what the terms of that deal is. It's a $350,000 purchase price. It's a 6.5% interest rate. It's a 5-year balloon. And ultimately, this is exactly what we're doing in terms of structuring that deal with those parties. And that person who is the buyer is promising you that they're going to pay that off. But you're going to release the deed to them. They're going to become the owner, just like a normal loan, conventional FHA, VA, USDA. But there's a deed of trust, which is essentially going to say, when you break that trust, this is how we're going to foreclose on that property. And I want to share the worst case scenario. Worst case scenario is the buyer defaults. You've kept their down payment. You've kept all the payments that they've given you. You foreclose on them. There's going to be a cost associated with that. But now you have the property back to start over. Either sell it outright and get it off the books or start over and owner finance it again. So that's why banks make tons of money, because they're putting themselves in a situation where they're providing somebody money to purchase and then also covering the debt. And I'm going to tell you this. This has been a perfect situation for people who are looking for long-term cash flow, better than a bank. And why this video is super important for people to listen to is that here is the situation where it makes most sense to go with this property owner financing situation. Let's say that your intention was to hold it as a rental anyways, but you don't want to be a landlord. You don't want to pay a property manager. You don't want to put reserves set aside for CapEx or vacancy or marketing or turnover or dealing with the day-to-day property management of a property. It can't be an Airbnb because it just doesn't make sense. So now you've removed yourself from being the landlord and you've ultimately increased your valuation of that property significantly, meaning you have a contract price and an earned interest potential, and you've just sold it most likely for the price roughly in the range that you want. And structuring those deals ultimately needs to be the advice of your attorney. Structuring those deals needs to be the advice of the real estate agent you're working with and the market and what they see typically with owner financing contracts and your risk threshold. But ultimately, it makes sense for people to go down this route when they don't need to sell the property. And one of the first questions I ask when I reach out to somebody who's filed an affidavit, they have an attorney, they may have a real estate agent, is, I own an investment company, and I'm not just trying to send you a quick offer, no realtor fees, no closing costs. Are you open to ultimately talking about terms and selling a $250,000 property for a long-term potential of maybe $300,000, $400,000, $500,000? And so why this is so powerful to understand is that there's times where I will buy an investment probate deal off market. They just want to wipe their hands and move themselves out. And I turn around and owner finance it. So I'm doing exactly what I'm suggesting that you could possibly do, but I'm just buying it first and then doing it. So ultimately, these situations are going to make sure your cash position and the goals of the estate are in alignment with what the attorney is advising you on, what the court is suggesting or allowing you to do, and what's best for the market and the price that you want to get for this property. Structuring deals is a big part of the process with probate, making sure you don't show too many cards during a residential listing, making sure that you're not leaving too much money when you're selling to an investor. But these solutions, these problems, these goals that you're trying to accomplish, you need to investigate all options. When you get a letter in the mail, when you get a call from a real estate agent, take them up on a conversation. Don't just hang up the phone. Don't just throw it in the mail or into the trash. You want to make sure that you're making the best possible decision for your probate situation. Now, as always, thank you for this a wonderful time to talk to you about this. Please schedule an appointment with me. Let's talk about your situation. Let's get you referred out to a great attorney. Let's make sure you're making the most money for your probate real estate. Have a great day.